Hello everybody and welcome back to my YouTube channel. I am so excited to have you here with me today. If you are new here, then welcome, and if you are not new here, then welcome back. So for those of you who don't know me, my name is Rachel. I am a speaker, an author, a business owner, but most importantly for today, I am an accountant. And so today I'm going to be running through the very basics of accounting that you need to know as a small business owner. As an accountant, it's my job to teach you the stuff that we're not taught at school. So today we're going to be covering the most frequently asked questions that I receive from small business owners, freelancers, and people just thinking about starting a business. Today we're going to run through company structure and how to decide, business bank accounts and when to get one, how to track expenses, allowable expenses, what accounting software is and when you need it, how to withdraw profit as a business owner, tax planning, and finally, when to get an accountant. So, let's go. So kicking things off with company structure is going to be one of the first major decisions that you face as a business owner. In the UK, we have two main ways that you can be self-employed. We have acting as a sole trader and as a limited company. So a sole trader is where you as an individual tell HMRC that you are receiving income that when it comes to you is not taxed. From there, your responsibilities are to firstly prepare a set of accounts each year to work out your income, your expenses, and the difference between those two numbers is your profit. Once you've completed your set of accounts, you then pop your profit figure onto a self-assessment tax return, and the tax return is where we zoom out, look at you as an individual, declare any extra income and expenses, maybe some payroll income, student loan deductions, and pension contributions, and we calculate how much tax you need to pay to HMRC. Acting as a sole trader is very similar to being in employment in terms of the types of tax that you pay, as in we're paying PAYE and national insurance. The differences to being on payroll, and they are big differences, are that it is your own responsibility to calculate how much tax you need to pay, and that rather than paying tax monthly through employment, you pay tax annually or 6 monthly depending on how much tax you pay. So the other alternative in the UK is a limited company, and a limited company is a separate legal entity to you. So as a sole trader, you are trading as yourself, and you and the company sit on the same seat. You are the business and the business is you. A limited company is a separate legal entity. And the three top reasons that we see people incorporate limited companies within the UK are, firstly, tax efficiency. So the general rule of thumb at the moment, as at 2022, is that if you run a company and your profits are between 30,000 and 35,000 in each tax year, it could be tax efficient for you to be a limited company rather than a sole trader. That tax efficiency also includes accounting for the extra compliance work that you have to pay an accountant to do and the extra time and effort that it takes to be a limited company as opposed to a sole trader. The tax efficiency simply comes from, as a sole trader, you pay PAYE and national insurance, but when you're withdrawing profit from a limited company, you pay dividend tax, and that is taxed at a lower rate than the basic income tax. So the first reason we see people incorporate limited companies in the UK is tax efficiency. The second reason we see people incorporate limited companies is the limited liability status. So the word limited in limited company literally means limited liability. So I mentioned earlier that as a sole trader, you and the business sit on the same seat, but with a limited company as a separate legal entity, you and the company are completely legally separate. That is very attractive to lots of people for lots of different reasons. Maybe you are building liabilities within your business and they don't just have to be strictly financial liabilities. It could be insurance policies, asset finance, or maybe just your tax bill. It could also be that you are building wealth as an individual. Maybe you just bought your first home or you have a family that you'd like to keep completely financially separate to the limited company. The third and final reason that we see people incorporate limited companies in the UK is the status of being a limited company. So very often for influencers, they can find that they are able to pitch and act as a more senior authority within the industry if they are a limited company. For more product-based businesses like Etsy shops, they're actually able to obtain more wholesale opportunities simply by being a limited company. So those are the differences between being a sole trader and being a limited company. And next up, we're going to be talking about business bank accounts and when to get one. The very short answer to this question is get one as soon as possible. I'm just going to run through the statutory requirements for getting a business bank account. So as a sole trader, you don't need to have a separate bank account. Having a bank account in your own personal name is absolutely fine. As a limited company, it is a legal requirement that you have a bank account in the name of the business. It's very easy to set up a business bank account once you've incorporated your company, but it is a legal requirement that you have one. So limited companies have to have one, sole traders don't have to have one, but I think everybody should have one. Separating your business finances to your own personal finances is great for many reasons, and one of the most important ones is headspace. Completely separating your personal finances and your business finances is a great way to almost start viewing your business as a business. Lots of people become business owners by accident. Maybe it's a hobby, you build a following very gradually and you start making revenue from it. Many people are accidental business owners, and one of the first very strict and formal separations you can do to start treating your business as a business is separating your finances. Once we move past the headspace perspective, there are some really, really great accounting and financial reasons for separating your finances. If you have a separate bank account, and as a sole trader, you can just create a separate bank account in your own personal name. You can even just create a separate bank account, a current account, with the bank that you already bank with. Just keep things separate. Once you've done that and you get the people who pay you to pay you into that bank account, and you pay for any expenses that you have for the business out of that bank account, what you're doing is automatically tracking the income and expenditure within your business without even trying. The only thing that you need to do is get people to pay you in and pay out of the same place. So next up, we're going to be talking about how to track your expenses. Very simply, tracking expenses, I'm just going to split into your options and then the actual requirements. So HMRC states that for every piece of income and every piece of expenditure, you keep an invoice or a receipt, which just details the date, the amount and the description of what it is that you invoiced for or what it is that you paid for. It's really important to note here that the rules with HMRC have changed. So rather than having a shoebox underneath your bed with all of your physical receipts in, HMRC actually accept digital records in place of hard records for their investigation purposes. And so having a Google Drive or an iCloud folder or a part of your inbox that's dedicated to invoices and receipts is absolutely fine. HMRC do accept digital records, and so you don't need to keep hard copies of everything. So those are the statutory requirements in terms of having to keep records of your expenses. But then what are your options and how do you track them? So as I said earlier, this basically works on a spectrum of how much information you'd like to keep track of, what you're using this information for, and what your budget is. There are many options that are completely free, all the way up to accounting software, which I'll come onto shortly. So if I start at the lower end of the spectrum, which is the free services, any business owner can use their business bank account as a way to keep track of their expenses and their income. Again, as I said earlier, people can pay you into that bank account, you can spend money out of it, and as long as you've got invoices and receipts for every single line item, that is absolutely fine. There are some incredible digital banks out there who can offer you different ways to categorize your expenses, attach receipts to your expenses. Lots of our clients absolutely love Starling and Monzo to be able to categorize their expenses and upload copies of all of their receipts as well. There's lots of free opportunities for you to capture this information. When we move on from keeping a separate bank account upwards, the main reasons you would then start paying for some software to keep track of your income and expenses is basically to obtain extra information and reporting out of that. And that's where we move on to accounting software. So accounting software is software that we connect your business bank account into the software. They talk to each other, and so anything that happens within your business bank account also happens within your accounting software. We categorize the expenses, so we tell the accounting software that that was income, that was an expense, who the customer was, what it was for, and how we paid them. And then from there, we can pull reports to tell us how much money we're making, how much profit we're making, how much we should be setting aside to plan and save for tax. We can use that data to make really important financial decisions within your business. So the next really frequently asked question that we get within the business is, what type of expenses are allowable? This is actually a very easy question for accountants to answer. So the HMRC guidance dictates that in order to claim an expense as a business expense, the expense has to be wholly and exclusively for business use. What that means is if you can prove that there was no personal element or personal gain as part of spending that money within your business, you can make the claim. The really common things that we see as accountants as expenses going through the books are subscriptions. So it could be that you've got Google licenses, Office 365, Canva, Adobe, the subscriptions that you need to run your business. We then see lots of legal and professional fees, advertising costs, PR costs, travel expenses where the travel is wholly and exclusively for the purpose of the business. If you're ever in doubt, always remember, is this wholly and exclusively for the purpose of the business? Would I be spending this money if I wasn't self-employed? If the answer is no, then spend it on your business card and claim the expense. Okay, next up, I'm going to be talking about how to withdraw profit as a business owner. We all become self-employed for lots of different reasons, but the reason that we all have in common is to make some money. And we see it all the time. Financial education is the best way to get business owners to lean into the money-making side of their business. And so understanding how to withdraw profit as a business owner is probably one of the most important things I'll be able to teach you today. And that's why I've created a completely separate YouTube video all about how to withdraw profits as a business owner. I'm going to talk you through the different ways that you can withdraw profit, the different words that we use to describe them, and how that impacts you from a personal tax perspective. I'm going to link the video up here for you now, and you can check it out after this one. Again, once you understand how to withdraw profit as a business owner, the next thing you're going to want to understand is how to plan and save for tax. These are huge topics that this 10-minute video isn't going to do justice, and so I'm going to pop a video up here to teach you how to plan and save for tax. This video is fantastic, if I say so myself, and it covers off personal tax, corporation tax, and I explain what payments on account are and why they are important to everybody who is self-employed. This then brings me on to my final point, my final frequently asked question, which is, when should I get an accountant and why should I get an accountant? My answer to when to get an accountant, very simply, is when you want one. As people who are self-employed, having access to financial education is probably one of the most important things you can do. But the reason I create lots of content like this, free, digestible, consumable content, is to get financial education out to the people who need it the most, completely free of charge. You should get an accountant when you either want to lean into your numbers, when you don't want to do it yourself anymore, or you need some guidance. Having an accountant can really help you treat your business as a business, maximize your allowable expenses. Many people do not claim all of the expenses they're entitled to simply because they're afraid. It will also help you with your tax planning, understanding how to plan and save for tax, and making sure you're being as tax efficient as possible at every opportunity. Having an accountant can really change the game in terms of how you treat your business and actually how you treat yourself as a business owner. Never forget, if you are looking for an accountant, nobody knows your business better than you, and that's probably the most powerful thing an accountant will ever say to you. As much as reaching out to an accountant is for financial guidance, don't ever let an accountant make you feel like they understand your business better than you. And so my answer to when to get an accountant is when you want one. So those are all of the frequently asked questions that we get running an accountancy practice by small business owners. I am so grateful for you spending some time with me today. If you have liked what I've been talking about and you would love to become a client, you can use the links in the description to this video to book some time straight into my diary. If you enjoyed this video, please do give it a thumbs up. Subscribing to my channel is the very best way to support me as a creator and continue enabling me to create this fantastic content for you. If you have requests, if you've got more questions for me, pop them in the comment section below, and it's the comment section of my YouTube channel that dictates the content that I create next. Thank you so much for spending some time with me today, and I hope to see you again very soon.